Emily, thank you so much for joining us here at SuperReturn International. We're seeing ESG right at the top of the agenda at this conference. How do you feel about that, and are you seeing true adoption now?
Well, I'm really pleased to see that. I think that you cannot decouple ESG from the broader discussion about making an investment process. One of the great things that I've had the opportunity to do here is speak with a number of GPs and LPs who have really been taking this seriously over a considerable period of time, and they've talked about how they integrate it into their investment process and how they view it as essentially table stakes for investing.
And you mentioned LPs and GPs there. Who are you seeing as the main drivers?
Well, it's really interesting. It's a push-pull dynamic in the sense in some cases it is the LPs stepping up and saying here are our investment requirements and forcing the GPs to think differently about where they place money. And in other cases it's the GPs demonstrating and bringing the LPs along and saying here are some interesting investment opportunities, and they actually fit into some of the governance issues around environmental and social issues, and then the LPs therefore are educated and say this is something that we need to look at across all of our investment portfolios.
And what are the motivators? Is it a positive, we want to do good, or is it a more negative, actually we've seen the risk now?
Yeah, well I think there are two components. One is certainly the manifestation of physical risks. Globally over the last 3 years we've really seen an increase in some of the extreme weather events, and so we've all had to live through that, whether it be the current situation in Australia with the bushfires, the wildfires in California, hurricanes, flooding, drought, and so that's really starting to bring a level of consciousness. That being said, it's also impacting from a financial perspective, whether it be in the insurance sector having to make payouts, whether it be disrupting supply chains, or in the manufacturing side. Having that physical impact is really, really critical. The second is on the transition side, so on the regulatory side. And for example, here in the EU, we will be seeing some interesting legislation coming out related to the regulation of investment managers who want to market products in the EU. And that is also a really compelling driver.
So regulation there, the other thing I wanted to ask you about was sort of measures of doing ESG well.
Right.
That would be really helpful.
Mm-hmm. It would be helpful, and I think we're still a ways in terms of being able to coalesce around one pathway in terms of saying this is done well, this is done poorly. There are a lot of frameworks and standards and both NGOs, government, quasi-governmental institutions that are working to advance this. So I think one of the issues is on the disclosure and transparency aspect, and so this regulation will really drive the standards for disclosure and transparency for any asset manager or financial market participant that wants to market their products in Europe. And this will mean setting a benchmark for the rest of the world to say, is this the taxonomy we want to adopt? Is this the standard we want to adopt going forward? So I think it's a really good starting point. This will be released on March 12th, and so it's just around the corner.
You talked about a conference like this being a great opportunity for you to talk to the right people. How optimistic are you about this industry embracing and making that change and doing something that's good for society?
Well, I think that we don't even need to think about it in terms of the do good for society. There is actual financial evidence that not taking these metrics into account makes a company a laggard or makes an investment a laggard. And so it's even less about the impact side. I am very excited to see people talking about impact and talking about that being the potential future. And I asked a panel today, I said, what do you see us discussing 5 years from now at SuperReturn? And they really focused on that impact, that intersection of bringing capital and mission together, which is encouraging. But that is to say, right now, if you're not looking at ESG metrics, then you are not at the forefront of making money.
Let's hope we're having this conversation again in 5 years. That's exactly what we're talking about.
Absolutely.
Thanks for sharing your thoughts. Great to talk to you.
Thank you for having me.